Thank you for joining us. I'm Juan, lead trader and founder of ProsperiTrade. In this video, I want to discuss my approach to trading and investing. So I day trade, I swing trade, and I also invest. For day trading, it's the riskiest approach. I've day traded for over 7 years, and I've narrowed it down just to a few setups that I like to trade. I usually don't recommend day trading, especially for new traders, and I don't recommend chat room alerts and all those things. I've day traded with a lot of the major gurus, and I think just the approach of trying to follow one of those chat rooms would lead most traders in trouble. Most of the day traders, they like to trade momentum stocks with low floats. So I think if you did a survey in some of those chat rooms and followed their profits for a year, I would guess that 90% of them are not going to be profitable. A lot of these major day traders, they have these scanners that are shown, and whenever a low float stock, so a stock that has just a certain amount of shares that are rotating to be traded, and to give you an example, Bank of America has over 1 billion shares circulating. So even if thousands of people traded it, it's not going to affect the price. As opposed to a micro cap stock that might have under 1 million or some as low as 500 to 100,000. These day trader rooms have thousands of followers, and they're going to buy thousands of stocks. So it's going to cause a spike. So some of these day traders, they buy as soon as they see that this stock is a low float, it has momentum, and they'll buy 25, 30,000 shares, a lot more than their average subscribers can buy, and they'll use hotkeys to offload them as everyone else is buying them. And if the stock continues to move, they might buy more, but if it starts to crash, they'll just use a Control Z or whatever hotkey that they use to offload 100% of their shares, and they'll be profitable even if it's a couple thousand because they bought such an amount. And the majority of the followers, it would be too quick of a movement, and they would have only bought a couple thousand. So more than likely, they'll have a little loss. And then you'll have the inexperienced traders that are the bag holders, and they'll just keep holding, hoping that it'll pop up, and they'll end up losing money. You will make money sometimes, but consistently over a year's time, if you follow some of these chat rooms, I highly doubt that you will make money. So my approach for day trading, I've been day trading for over 8 years. I used to keep a diary of all my trades in an Excel sheet and kind of like look at them and analyze which stocks were successful, what was their criteria, what was their market cap, what was their float, what was their pattern. And I really just came down to just 2 or 3 patterns that if I see it, I'll day trade it. And that's kind of how I approach day trading. The goal with this channel is to make money, to invest your money and grow it, whether that's taking a few day trades a month, whether that's swing trading or investing. The next approach is swing trading. So I take a couple of approaches with swing trading. There's not a whole lot of fundamental analysis, but I do still look at the fundamentals of a company, even if I'm going to swing trade. My approach for swing trading is either looking at a company and look at the technical analysis and identifying some support. And if we look at the chart here, for example, Tesla, you see here that how many times it tested 564, 550 dropped, and here it dropped to 553. And every time it found support here and it started to rally back up. So this is a swing trade possibility. So you would take an educational guess that next time if it drops back down to 550 and it tests that, it would be wise to take a maybe buy some call options. You can buy call options and you can be safe and kind of hedge your position and do like a vertical spread or some sort of spread where you don't risk as much. This is how I approach swing trades. Or a riskier way, it's sometimes I look at the biotech stocks or certain acquisitions or mergers that are going to happen, and basically you're buying the rumor and selling the news. So if you look at my video BLRX, I looked into the company, I looked into their research, and I felt that they were going to get FDA approval based off of what I read, based off of previous studies that they did. So I purchased the stock, and when the news came out 3 weeks later after I made the video that the FDA approved it, it rallied over 70% total since my initial video. And as it spiked, that's when I sold it. Because usually when the news comes out, there's going to be a spike and people are going to buy, and then they're going to take profit that day. So buy the news, buy the rumor, sell the news. So that's another approach. And then there's investing. So with investing, I gave Tesla as an example. And Tesla, I'm going to use Tesla as an example in this video why I wouldn't invest in Tesla long term. So you have to take a simple approach to investing. Do you like the company? Do you like their technology? Are they going to be around for the next 10, 20 years? Are they managed well? Do you believe that they have something that someone can't compete with? Are they offering some sort of technology that someone else can offer? So just these basic questions, you have to kind of decide, is it going to be a good company? Is it going to be around? Is there a possible moat or something that they're putting themselves in a situation where the competition, they're going to have an edge over the competition, like Apple, for example. Everybody loves Apples. Amazon, it's hard to compete with their prices. Walmart, it's hard to compete with their prices. So they're giving themselves an edge. So once you have all these things, then you have to obviously look at the financials and ask yourself, is it valued? Is it worth buying it at this point? So there's a lot of companies that I've seen that I like. I like the printing sector. I think that's going to have a future. There's other companies in cybersecurity that I like, but because of last year's rally, they're just way too overvalued. So if the goal is, whether you like a company or not, if the goal is to take your $1 and to increase it, you can't really buy a company too high, that's overvalued. So, and I think that's the case with Tesla. As much as I love Tesla, as much as I think Elon Musk is going to be successful in anything that he does, you still have to take a look at the financials, and it still has to make sense. I'm going to use ARK's investment here. And just a disclaimer, I'm not the biggest ARK fan. I do watch them. I do watch what they talk about. I do like some of their research on some of their smaller biotech stocks, but I don't look at their biotech stocks as a long-term investment just because they seem like it seems kind of like high risky type stocks that they take a large amount of shares in. So I have mentioned them in previous videos just because it's popular to mention them. There are a few stocks that I spoke about that they happen to invest in, and it wasn't that I saw them invest in it and made the video. It was a company that I just looked into, I liked it, and they happened to invest it. And there's hype around it, there's popularity, so I did mention it in the video. But I'm not the biggest ARK investment fan. Just wanted to put that out there. And yeah, so if you look at their price target, they have they have a bear case, which is 1500. They have a bull case and expected value. Just trying to be brief on these, but really for all three, I think they're extremely overvalued. So, they're predicting that their bull case, that they're going to sell 10 million vehicles with the average sale of 36,000. And even their bear case of 5 million, up from 500,000, which they're currently at. That's just extremely optimistic. It's not impossible, but it's a little optimistic for me. They go over insurance, they go over self-driving vehicle, and all these things. They factor that these are gonna give them the bulls and bear case that the numbers they came up with basically here. So if we look at some of their financials, we'll come to look that they were not even profitable until last year. So if you look at their revenue, the gross profit, they weren't profitable until last year. And we have here 80 million, and then it was a big jump, and I think that's what caused a lot of excitement, jumping from 80 million to 1.9 billion in 1 year. That caused a lot of optimism. That caused a lot of videos to have like an extreme bullish case for this company. But to hold, to have that type of growth for the next 5 years, it doesn't seem realistic. So number one, the first thing is with growth, there's going to be debt. So they want to grow in the insurance sector. They want to grow in the taxi sector. There's going to be debt with this growth. So that has to be factored in. There's not a whole lot of new companies that within their first 5 years, they're extremely successful, and they're not only successful, but become the leaders. Like Toyota sold, I think it was 9.5 million vehicles. So this fairly new company, Tesla, is going to come in and make have Toyota numbers. That doesn't seem like just the norm. That's not the average. So when you're investing, you're really taking and at the end of the day, whether you're putting together a DCF or reverse DCF or whatever kind of free flat cash flow analysis you're putting together, it's still an educated guess. So you have to, when you put your thesis together, you have to be realistic. You have to look at past performance on other companies, what statistically usually happens, and what the norm is. And what they're predicting for Tesla to happen is just not the norm. I mean, is it going to happen once in a while? Yes. There are some companies that that do just exceptionally well and become exceptionally successful within the first few years. But normally that's not what happens. So looking at also, some of their, from 500,000 ARC states, from 500,000 vehicles to 10 million, which is over 80% growth per year. That doesn't seem too realistic. They're not I don't see where they factor in the expense for this growth, whether it be via taking more debt or they've mentioned dilution. So, if they dilute, then whatever percentage of the shares that you have becomes less valuable. So if you have a company that has 10 stocks and 10 investors, each investor has 10% of the company. Now, if they dilute it to, let's say, 20 shares, now you own 5% of the company. It's still the same value at 10%, but you own a less percentage. So over time, you're going to end up losing. So that's another issue, the dilution part of it. So I don't see them really factoring in if there's major dilution. They're bullish on the car insurance, but I mean, it's just such a competitive business. It's also regulated, so I don't see how they're going to make however many billions they've. I think they said 300 billion, or I'm sorry, 6 billion here for the business, in which would be, I think, about 8% of insurance business. They go about, it's a $311 billion business, and to make 6 billion, it's just doesn't seem realistic. The autonomous ride share, they're predicting such a high amount, and there's a lot of hurdles with this. The autonomous, I mean, like, government has to approve it. There has to be regulations. What if there's an accident? There's just so many variables that have to be factored in. Currently their price earnings per share are at 0.64 cents. A lot of analysts are predicting about a 30 to 40% growth. So even at, let's say, $3.20 per share, if you take the expected value of 3,000, if the EPS, earnings per share, was 320, which is what they're estimating, that would give it a P of about 937. And if for the bullish case, 4,000, that would give it a PE of about 1,250. And even for their bear case, that would give it a PE of 468. Honestly, these just they don't seem like realistic numbers. It's, and again, we have to go on what other companies are doing, what other companies are averaging. So if we look at other competitors, Toyota, you see here their average PE below 20s, 17. You've had Honda here a 1 point PE of 200 and came down. You had here Ford, highest 36. But, the average somewhere between 18, 20 something. Now, let's just say Tesla is somewhat successful and they're able to keep up with the type of numbers that Toyota is doing as far as car sales. And let's just say that their insurance is somewhat successful and the autonomous car driving is somewhat successful. I probably still wouldn't go higher than a 40 PE ratio. I'm sorry, yeah, 40 PE ratio. I still wouldn't probably go higher than a 40 PE ratio. If you want it to be extremely bull, let's say 50 PE ratio. Just say best case scenario, and that would give you a stock price at around 160, and that's based off of the current shares outstanding. So if they dilute, then it's going to be even lower, and that would be if anybody else was doing a DCF on a company, and Tesla's the exception, obviously, because people are super optimistic about it. But if any other DCF was done, most people would give the target price of $160, and that would be the target price. But this is Tesla, so they're just saying Tesla is going to change everything, change the world. But you do have here, look, you have here this person giving it and this is tip ranks, giving it as low as 150, average here is 770, and as high as 1,200. So what I think will happen, you have articles like this here that came out just today, bearing Tesla to get a big boost in Washington. So as legislation happens that is going to force America to go green, this is going to cause spikes in the company. This is going to cause spikes. So if you want to approach it that way, day trading it or swing trading it is the best approach. Now, is it possible that they do get to that 3,000 that all these YouTubers are saying, that ARK Investing is saying? It's not impossible. Anything can happen. But, you want to take the path that has the highest percentage of success. At the end of the day, you're risking your money. So, why would you risk it on something that statistically normally doesn't happen? So I basically, look for stocks that are worth investing, that I feel are decent financially, that I'm getting in at a good value, and that I believe in the company, in the technology, in the business, in the management. And that's my approach. That's our approach here at ProsperiTrade. And thank you for joining us, and we hope to see you on the next video. Please make sure you subscribe, hit the like, and comment. Thank you.